Hello guys, happy Thanksgiving. Today a lot of people, like yesterday, Thursday, and today Friday, and we have Amazon on, I think, on Monday. There is a big sale, and here in the United States of America, all the people they know, so they go and they shop for a big discount. Okay, so when I'm speaking about Black Friday, is that what's the relation between Black Friday and the stock market? You know, in the stock market, it doesn't behave like a normal market, and this is the problem that most of the beginners, they can't understand. Okay, it's not when the some stocks or company stock goes down, they think it's a discount, but sometimes, not all the time, it is not a big discount. It is an investor who is selling millions of shares and the stock is dipping down. So for you, when you go to shop for Black Friday, okay, you need a computer, you need a laptop, you need a cell phone, whatever you need. Okay, so you know the original price and you are shopping for a big discount. That's why you go to Black Friday sales and you try to see retails or online like Amazon or wherever you want. Okay, so you know that the price, for example, a computer is like $1,500, and there is a big discount and you buy it with $700. Just an example. Okay, so you know originally how much is the price, and now you buy it for a discount, a big discount. Okay, this happens only once in a year. Okay, in Black Friday. Black Friday is, some retailers begin on Thursday, some on Friday, others on Monday, like Amazon. It depends on the retailers. Okay, so you know that it is a big discount. Why? Because you know the original price. Now let's go to stock market. A stock that it is $90, now it is $2. Okay, this is what some people, when they ask me a question, they said me, oh, what do you think about this stock? I think it's going up. Okay, so I check, the stock is $2. Okay, it's penny stock, you know, manipulation lesson. Now I go back in history, let's say for 1 year, and you see this stock was $90 just last year, but today is $2. Okay, is this a big discount? No. This is the thing that I want to explain always. When there is a drop in company price, try to check why. Is it a small correction that it is $1, $2, $3, or $5 with the whole industry? Or is it by itself that it is going down? When it is by itself going down, not the industry, not the whole industry, this is not a correction. This is a big problem, because a mutual fund, for example, who owns a lot, who owns 10% or 5% or 6% of this stock, he bought it last year or 2 years. Okay, now he is selling. Now when the mutual fund is selling, the other guys who are floor traders, as you know, the sharks of Wall Street, what they do? They see a stock, they see a big sale. What they do? They help and they short it again. They don't go against the mutual fund because he's stronger. They can crush them. Okay. Now, if a mutual fund is selling, what does it mean? Its millions of shares are sold each day. So anyone who wants to go up, he will be crushed. So what does the floor trader do? The floor traders, they help the market going into the direction it is going. So they are just helping. So if someone is selling, a big guy like a mutual fund is selling, his manager, let's say he bought this stock 2 years ago, the stock was $10, now it is $100. Okay, this manager has made a big profit from this stock. Now there is a time when he wants to sell, okay, to have the profit, the big profit. Okay, this is the end of the year, and he wants to finish the year with the money into the account. In order next year he buys other stocks. So when he is selling, especially when you find the stock by itself is going down without the industry going down, because there is a big difference. That's why I always ask you, please check the industry the stock is in. Okay, if the whole industry is going down, it means there is a big sale of all the stocks by mutual funds. But when there is only one stock that is going down by itself, not following the others, maybe they are going up and only this company is going down, it means you should check what's the problem. Okay, now for me as a swing trader, I don't care. I don't care who is selling, I don't care who is buying. If the stock is going down, either I short or I don't buy because the stock is going down. Okay, now when the stock is going up, I will buy because someone is buying. Okay, so I should follow what the market is doing, the direction, the long direction. Okay, like swing trading is few days, few weeks, or few months, depends on the stock and yourself. Okay, so this analogy between Black Friday and the stock market is that stock market behaves differently. Okay, behaves differently, but people, they keep having this idea of you buy on a discount for real market, which is like products like TVs or computer or whatever you want to buy. This is different from the stock market. The stock markets, they are players, they are playing. A lot of people are buying, a lot of people are shorting the stock, so it's like a chaos in the market. So that's why it is unpredictable. Okay, you just see the stock's going up, buy. The stock going down, don't buy because it's going down, and maybe it's going down and down and down. And a lot of companies, they lose a lot of business like this. Why? Because big mutual funds or sometimes investors, they take their money from this stock or this company because they think it's not worth it, and they buy other stocks. That's why when the company dips, sometimes it's a big problem for those who hold, they say, oh, hold for a long time. Okay, so I'll just make sure that you understand that the market, that the stock market is the biggest game. It's a game by itself. So you should understand the game in order to make money. Okay, it's not like in Black Friday where let's say a TV, as I told you an example, is 15, like a computer is 1500, you find it with 700. Okay, but after a few days, after the Black Friday, this 1700, it goes back to 1500. Okay, so this is what's the thing about Black Friday and stock market. So most of the beginners, they don't understand. They don't understand this idea of the game of the stock market. Okay, so when you have a clear idea that there is a sure thing in the market, there is no sure thing, because the beginners, they want a sure thing. They want to find a strategy that when you apply, you make money. It didn't work like this. You should, by yourself, you should work hard in order to make the strategy works, because strategy by itself, it can't work by itself. It's not like a software that you put, as one guy, he told me, oh, I need to buy a software and it makes me money. I say to him this: if the guy who make the software, there are rules in the software, okay, it's just a trading thing. How can this guy gives you or rented to you this software that makes the money, and he doesn't keep it for himself? Ask this simple question. Now, for me, when I was a beginner, it happens to me that someone, I was searching, like when I was searching, the only question I had before, when I was like a beginner, what is the question? The question is, why stocks go up and why they go down? This is my only question. I don't have another question in the stock market. That's it. I want to answer this, so I go everywhere. Books, online videos, seminars, groups, wherever you can think of, I have done it. So in order to search what's this. Now someone contacted me, they have a software, and I met him for 2 hours explaining to me how the software works. And he told me in 15 minutes you can have $500. I'd say it's okay. 15 minutes I can have $500 is good. And I told him, do you sell the software or do you rent it? He said to me, we rent this software for $350 for each month. You install it, they give you a CD, you install it, and you begin making money in the market. Okay, I was naive, but I didn't buy. Why I didn't buy? Because I asked him a question. If this software gives you $500 each 15 minutes, how can you sell it? How can you rent it to me with $350? It's not logical. Oh, he told me because we make only one software and we sell it to thousands of people, so we are making money, although it's very, very cheap. I told him, thank you very much, but it doesn't work for me. Trading is a human activity. It is an art by itself. It's human. Okay? If you can do a software, it can work. For example, a software where the whole market is going up, it can work for 1 month or 2 or 3, but when the market is down, it cannot work. Or if a software it charts a lot, it can work for 1 month or 2, but it cannot work for all the time, because the market, sometimes it is up, sometimes it is down, sometimes it's trending into a range. So there are a lot of things about this thing. So this video, like a theme or summary, is that stock market game, believe me, you should understand it in order to make the money. It is not like in real life, in real products, where like Black Friday, where you know the value. That's why I always tell the guys, who are searching for a value of the company, of the stock, you know, this investing thing. I told them what? Okay, this is my idea about the value of the stock. The value of the stock is the price that you see now. That's it. You don't know if the stock of the future will go up and makes too much money, and you don't know if it goes down and you lose money if you are going long. Okay? So why the people try to say that this is the stock go down, it's a value, it's a discount, buy it now, and it doesn't work. And if you continue doing the same thing, you will lose a lot of money, and year by year you see yourself, you are not making money, or you break even, or even if you make money, you make like 5%, 10%. You can't make it like this. Okay? So understanding the game, because when I give this idea to people who are doing dividend investing, and I argue with anyone, even with the people who are like highly educated in companies and they know investing a lot, I told them, okay, the dividend is taken from the price, and they told me, no, it's taken from earnings. Which I said, which earnings? You see that the stock, that the price before the X date, let's say it's $100, and let's say the yield is 5%. So the X date what do you find? You find that the stock is $95. Why? Because the company has taken $5 from the price and give it to you. But they give you something from your stock. Okay? The stock is $100. Okay? You stay investing for 3 months or 6 months or 1 year, and the stock, let's say it was 95, it goes to 100. But when they want to give you this dividend, they take it from the price. And a lot of people who are doing dividend investing, they don't understand that it is just a game. They take from the price and give it to you. I say, I'm sorry. I don't want that you cut the price. Okay, why you don't send me a check? 5% check, like let's say I have I bought 100 shares, a lot, with $100. So I spent $10,000. Why you don't give me a check with $500? Okay, $500, which is the dividend, and leave the price $100? No, they will not do this. What they do is $100 yesterday, for example, and today is the X date. Okay, so today you will find the price $95. So they let you eat from your own cake. They don't give you something extra. And these people, I have argued a lot with all the people who are doing investing, dividend investing. They don't understand a thing about the price. They don't understand. That's why they can't make it. And I tell the guy, why you are waiting 1 year for 5%? Stupid. And with the 3% of inflation, you are having 2%. So what you are doing? You are doing nothing. And if your stock that you are investing for 1 year, if it goes down, what do you lose? You lose from the stock, from the principal, and you are always loser. Okay? So you should look at the market from another angle of price. Okay? If I am not making the money, don't tell me I give you a dividend or I give you that and that and that. Okay? For me, I see only 2 colors in my account. Okay, and this I have find a lot of people who are sending me emails or comments, and they say, oh, I am in the green or I am the red. Yes, there are only two colors. There is no another color in a stock market. Where you find brown or pink, or it doesn't exist. I have only 2. Green, you are making money. Red, you are losing money. That's it. Either in a week, in a month, or in a year is the same. Okay? So this is it. So you should always focus to make the money, which is the green thing, the green dollars. Okay? To make the money. Now, if you are looking at your account and it is red, and you are telling me the stocks that I bought go down and they will go up again, you are, what you are, this is what we call a wishful thinking. A wishful thinking doesn't work in the market. If the people are shorting the stock, don't think they will stop at $1 or 2 or 3. They can kill the stock. They can kill the company. And a lot of investors, they flee when they see a big sell-off of a company, or a company has a problem. They flee like in 1 second. He has $100,000 in it. In 1 second, he's out. Okay? He's out. And some people, they're sleeping. Okay, we invest for the long run. Okay, invest. The stock was 90 and now it's $2. You invest for the long run. You invest when your company is going up for many years. You invest. You continue investing because it's good. You are making too much money. But if your stock that you bought this year is going 5%, 10%, 20%, and you are telling me I am, it's not a problem. It's not a problem. I will lose this money, but I'm not losing any money until I sell. Okay. And when do you sell? If the stock was 90 and it goes to $2, when do you sell? Okay. Until it becomes bankrupt, the company bankrupt, and you lose all your money that you put in the stock. Okay. This is just something that it is related to the price itself. So in the stock market, the price, the value of the price, I always say, and I will always say, it's the price that you see now, wherever each day. For example, in the morning, you try to check your stock. Okay, let's say it is let's say $75 in the morning. This is the value of the stock. It is $75. Now in the afternoon, let's say from 75 it goes to 80 because good news or wherever. Now, what is the value of the stock or the company? It is $80. It's not 75 because 75 is the past. Okay, it's $80. Now, the price is always what you see. As we say, what you see is what you get. Is always the price as what you see. If you bought stock $10, after 1 month it goes to $20, you are 100%. You double your money. Okay? But if you buy $10 stock and it goes to $5, okay? So you are losing 50% of your money. And you tell me the stock will go up. Who tells you? Who tells you that the stock will go up? You have read in a book, okay, that guy who has written that book, maybe he's thinking about a short correction in the market. It happens. The stock market doesn't go all like up. It goes up for 1 month or two. It goes down. It goes up. It goes down. It goes up. But the direction is going up. But if the stock is going down, it goes up a little bit. It goes down a little bit. So the stock is losing money. And if you don't see the price, you will have always problems. Always the problems of the price. Okay? That's why always in my videos, what do I ask? You should calculate your stop loss. Calculate what you are doing. If you don't calculate, you will never become a professional trader. This is it. Okay? Just buy and hold and things will be better. You don't know what will happen in the market. So you should always be alert to the price. Okay? So to sum it up, I'm telling you that Black Friday, big discounts, it is not the same as the market, the stock market, prices and so on. Sometimes when there is a small correction, this is the small discount that you have. But if the market is still going up, or the stock is going up, but if the stock make a high, for example, a stock, let's say it is $20, it goes to $25, okay, in a few days. Now, but $25, it goes to 23, it means it goes down. But after a few days, it goes up again and it goes more than 25. This is what we call a small correction. Okay? But if the stock is at $20, it goes to $25, which is good. But after a few days, from 25, it goes to 17. So this is not a small correction. This is the stock is heading south. It is heading down. And you begin to lose money. Now, when you lose money, it is real. Either you sell or you don't sell. It is real thing. You are losing money. Don't tell yourself, as other people, they always tell me, oh, if I don't sell, I'm not losing. Okay. And how long do you want to stay with the stock? If it is 20, it goes to $10. Okay, from 20 to $10, you lose 50%. How long are you going to stay? Until it becomes 5, it becomes 2, or it becomes $1, or it becomes nothing. Okay? So, put the price is the first thing that you should worry about. In investing, in trading, the price is king. Okay? The value of the company is the price now. It's not in the past, and it's not the future. Now, in the past, we know all the prices because you see the chart and you see the price. Whatever year, whatever month, whatever day. Okay? But the problem, the future, no one knows. So how can you predict you say this company, okay, it will go from 10 to 100 next year. If you know the future, you will become a billionaire in a few months. You don't need to stay like Warren Buffett the whole life in order to become a billionaire. You can make it right now if you know the future. But unfortunately, no one knows the future, and try not to predict that much. Okay? So thank you very much for watching this video. If you have any question, as usual, just ask questions and comment, thumb it up or subscribe if you don't. And happy Thanksgiving, and hope all you eat turkey and you have joy for these days, and hope you are off and you can make it. Thank you very much and have a nice day.